This interview is sponsored by Grantstone Shoes. Grantstone Shoes is a third-generation family of shoemakers that uses high-quality leather to make very high-quality men's dress shoes and boots at affordable prices. Mo and I each have a pair of these shoes. We think they're good. We've been wearing them for over a month now, trying them out. If you don't believe us, go check out the customer reviews for Grantstone Shoes. They have a lot of 5-star customer reviews. They also have excellent reviews from independent fashion bloggers. And if you like the shoes, enter promo code GOLD, that's GOLD, on the grantstoneshoes.com website for 10% off your order. That's grantstoneshoes.com, enter promo code GOLD for a 10% off discount. Hi, everyone. It's Jason Biarco of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. It's Craig Hemke, a.k.a. Turd Ferguson, of the popular website TF Metals Report. Craig, thank you for joining me again.
Jason, it's always a pleasure to visit with you.
Great. And the recording software is working this time, so hopefully it'll hold out here. No more technical glitches. Okay, well, Craig, I want to ask you about Donald Trump's shocking win. The stock market hasn't crashed like many people thought it would, but Donald Trump's obviously not in office yet. Do you think the powers that be, the elites, obviously we've seen how the media has treated Trump. Do you think once Trump gets into office in January, do you think the elites are going to try to do whatever they can do, maybe make the stock market crash, come up with new tricks with the media to try to get Trump impeached?
In a short answer, no. I would imagine that these powers that be, these elites, have just as much skin in the game as if Trump is president versus anybody else. And so they'd like to keep the plate spinning, keep the illusion going as long as they can, that all is well. So I guess I have maybe a contrary opinion to what some folks have, and that, no, I don't expect anything like that. But I don't think the market is going to cooperate. That's, I guess, would be my main theme, that we're getting this steady diet of stories now of explaining why the market's going up, why the bond market is selling off, why the dollar is strong. And I think in the end, it is an effect that's looking for a cause. People have seen this happen, and now they're out there desperately grasping for straws, trying to explain why the way things have moved the way that they have since the election. I don't think that it's a good thing the way things have gone, and I think in time here, we're going to have to pay the piper. We'll get this FOMC meeting behind us. It'll begin 2 weeks actually from Tuesday today, and it will conclude 2 weeks from Wednesday, tomorrow, with a rate hike. At least that seems to be a fait accompli. There's going to be a rate hike. The last time we had a Fed rate hike back in last December, the dollar shot higher. This put tremendous pressure on the Chinese to devalue their currency, which is pegged to the dollar. All of that then bled over into a strengthening of the Japanese yen. The dollar yen went down, the stock market went down with it, gold started to move higher. I wouldn't be surprised if all of that didn't play out again once we get past this Fed meeting in 2 weeks.
Those are some interesting points. I want to go back. You said that people are placing certain reasons for why the stock market hasn't crashed or it's going up. There's Nicholas Nassim Taleb out there. I don't agree with everything he says because he doesn't like libertarians, but he wrote this book called Fooled by Randomness. And he said, the mainstream media, market experts are always trying to name one or two reasons for why something happened. And normally there's so many factors involved that it's random why something goes up or down. It's normally never just one or two reasons.
Right.
Yeah. So there's just a lot of confluent factors going on. We don't know what's going on behind the scenes. You did bring up the Japanese yen. There are a lot of market interventions. The currency markets are probably, besides bond markets, the most manipulated and intervened markets that we have. So we have, governments want to manipulate interest rates. Governments want to manipulate their government bond market, make sure that there's plenty of demand for their government bonds, and then governments want to manipulate their currency and exchange rates.
No doubt about it, Jason. And on my site, we've been writing about that now for a good couple of years. In that the key, let me put it this way. If high-frequency trading algorithms, computers, basically, for a less sophisticated term to make it sound like I'm extra smart, high-frequency trading algorithms, computers. If computer trading is what dominates everything, and we know now that upwards of 90% on some market days of New York Stock Exchange and NASDAQ volume is just simply high-frequency trading computers swapping positions back and forth. If you can move the market simply through high-frequency trading computers, well, then if you want the market to move in a certain direction, you just get the input cues that these high-frequency trading computers use. You get them to get these cues to do what you want them to do. And the most important cue is the dollar-yen relationship. Don't ask me why. I used to be the carry trade. There used to be all these other factors. All I know is if you watch the dollar-yen, you can anticipate on almost a moment-by-moment basis changes to the S&P, and that ripples all the way down specifically to gold. The changes to the price of what we call gold, that fluctuates on a tick-by-tick, hour-by-hour basis with the dollar-yen as well. And so anybody can pull up a chart of just the last 3 weeks since the election, and you can see this, what is almost a 13% move in that yen weakening, which is the dollar yen moving higher. That 13% move in just the last 14 days. And at the exact same time, a 13% move down in gold. Have the fundamentals in gold changed? Has supply-demand dynamic changed? No, I maybe on the fringes. The reason gold has moved down is because the dollar yen has moved. It's really no more complicated than that.
Or Stanley Druckenmiller came out and said, he was selling his GLD shares. He didn't even own any physical gold. He only owned GLD. I don't even think he owned any gold miners. But, Stanley Druckenmiller is a billionaire. He's very politically connected. He's related to George Soros. And really, since he said he was selling his gold position after Trump won the election, that has accelerated gold's move downwards. So
but Jason, that doesn't explain how you can plot the gold price of COMEX gold versus the dollar yen for the last 5 years and see it move tick for tick all the way just the last 5 days. I would suggest you that Druckenmiller is just what Taleb is talking about. He's a guy that tries to make it seem far more complicated than it really is, so that then he can convince his hedge fund clients to continue to pay him his 2 and 20. When really it's a lot more simple than anybody would ever suspect, that if you can just simply move these indicators, then the price of whatever asset is going to move accordingly. So I wouldn't give Druckenmiller that much credit. I'd say he's a very good salesman more than anything else.
That's interesting. I was actually going to add that Druckenmiller is more politically motivated because, he was just told when gold was going up to get out of that trade. And we know that he's politically connected, like I said, to George Soros and others, and he's been donating a lot of money to the Democratic Party. So you don't know when these rich billionaires, whether it's Warren Buffett or some of these other guys, go out and give the public information on the news, we don't know how honest and sincere they're being. These guys are legit poker players. They could have already sold their positions and trying to make extra money on shorts or things like that.
Yeah, no doubt. And again, as you pointed out, what Druckenmiller allegedly held and then sold was shares in the GLD. Well, I would suggest to you that's not gold at all. That's synthetic. That's a gold exposure. That's a trading exposure. Now, some folks say, hey, that's great. That's what we want because it's too expensive to hold it and store it and all that kind of stuff. So we want all these synthetic forms. But gold then has been leveraged, 50, 100 times? Are there all these different paper claims for whether they're shares of the GLDs or shares in an unallocated account or futures contracts or whatever? How many other paper claims have these banks created for every single ounce that's actually out there? And so what actually trades, what actually prices the physical metal are these paper claims, which in large part are not at all related to the physical metal itself. But we've all been trained to accept that the price of this derivative contract that swap back and forth between computers is somehow the price of the underlying instrument. And anyway, my suggestion is they're not really related at all, but we've been programmed to accept it. And anybody that actually sells physical gold, and converts it back into physical dollars at whatever prices they're feeding you is frankly just a fool and uneducated and naive.
When gold was having its rally in 2016 when it started, a lot of it was paper buying. It was the trend traders, the hedge funds, the Western buyers who were coming and buying it. The Chinese, the Indians, the Russians, they weren't buying nearly as much on the way up. Now that gold has had a correction, since October, we've been seeing the very large record amounts of buying from the Russian central bank, physical demand in India and also in China start to pick up again.
Right. So the physical buying, the 40 metric tons that Russia bought in October, what Kuz Jansen put out, I think, said Shanghai has imported 905 metric tons of gold through Shanghai. China has imported that much through Shanghai just in the first 9 months of this year. That doesn't have an impact. That physical demand doesn't have any impact on the paper price. Instead, the paper price went up because of demand for the paper derivative. Jason, do you realize The open interest, total open interest of all of the contracts on the COMEX in New York began the year at 415,000 total. As price rallied from 1060 to 1380, that open interest expanded to an all-time high of 658,000. And now as prices come back down, would it surprise you if I told you that as of yesterday, open interest was back down to 411,000?
No,
So what really changed over the course of this year? Gold supply demand fundamentals, mine supply, strikes in South Africa, demand from sovereign nations like Russia? Or did instead price move because of demand for the paper derivative itself, those hedge funds seeking gold exposure? And then we know about how the supply and demand for that derivative is manipulated by the banks. It's the banks that supply the contracts on the COMEX, JP Morgan, this Goldman Sachs, Morgan Stanley, UBS, Scotia, Macata, all those banks, they're the ones that are in there manipulating the supply of the derivative so that when the demand comes in, as it did earlier this year, increasing open interest by 50%, price only moves by 30%. It's all a shell game, con game, illusion, fraudulent scam. And anybody that, like I said, that continues to recognize the COMEX and this electronic futures trading as some type of representative for the actual underlying metal is just perpetuating the scam, being almost a useful idiot for the banks. And I won't do it anymore. I've got to call a spade a spade.
Are you upset that Deutsche Bank is only getting fined about $28 million to participate in hand over evidence in discovery? Or do you think in exchange for handing over, actual information during the discovery process, they should be able to get off with more of a slap on the wrist compared to the other offenders, their co-conspirator banks, if they're actually going to, hand over evidence so people can prosecute and other people who had their money taken away from them, traders, mining companies, investors, can sue the other bullion banks involved?
I'm not at all concerned with the size of the Deutsche Bank settlement because it's insignificant. It's irrelevant. People are, I can't believe that they got off and now that's it. Because that's not it. That's not the only case. I have written about this and spoken about this extensively since April when this story first broke. This is just one class action suit. But what makes it significant is that every other class action suit alleging manipulation, either in London or New York, has been thrown out. They're usually filed in the U.S. District Court for Lower Manhattan. You get some bank-friendly judge overseeing the case, and they throw it out. But it doesn't matter how big the evidence was. A couple of my friends that I've got to know very well helped on a previous case. They lined up all this information about spoofing and everything else that these banks do to manipulate the price on the COMEX. And yet the judge just, you haven't proved that there's manipulation. They throw the whole thing out. This time, for the first time, we had the case moved forward. That's why Deutsche Bank moved. Well, they moved to settle because they're getting pressure from BaFin. But then once they did settle, they're singing like a mafia informant and turning state's evidence. And now the information that they provided was so large that the judge couldn't throw it out. And so now, for the first time ever in one of these cases, legal discovery is going forward. We're talking about subpoenas. We're talking about depositions under oath, all this stuff. And now the dam has been broken. So when we talk about Deutsche Bank on this first case getting off for $38 million, man, that is just we're talking seriously the tip of the iceberg. What's going to flow next? Now there's blood in the water. There's already all kinds of extra new class action suits that are being brought. And if one's gone to discovery, they'll all go to discovery. As we look back, this will be a monumental event for breaking the bank's stranglehold on the precious metals and the futures markets. It is just going to take a while because, again, any legal process doesn't move too quickly. So anyway, to answer your question, you got to look at the Deutsche Bank settlement in the proper context. This is now just getting things started. This is historic what has happened, and now we just got to let the process continue to play out.
Yeah, the U.S. legal system is very slow. I was actually in law school for a semester, so I can tell you the legal definition from my one semester of law school and other studyings of law. The legal definition of proof is a lot higher than what would be proof to you and me to prove. So
right.
Although in a civil suit, the difference between criminal charges and civil charges is different. So in a civil suit, you only have to prove 51% for probability, whereas in criminal charges, the burden of proof is a lot higher.
Right. And once BaFin, the German regulator, leaned on Deutsche Bank heavily enough to settle That is what opened the floodgates. Then they got so much information right away and Deutsche Bank's cooperation that this judge in New York couldn't throw it out. I mean, it was just too obvious. She couldn't. And so she allowed this discovery to go forward. And as long as that continues, as I said, we're going to get depositions. We're going to get subpoenas. We're going to get emails. We're going to get chat rooms. We're going to get texts. We're going to get all this stuff. And now that there's blood in the water, there will be, I mean, again, attorneys. I mean, once they sense there's money to be made, there's going to be class actions coming at them from every single possible angle. And it's going to get to the point where not only will the banks be in trouble and fined, and the potential damages could go into the billions of dollars when you loop in everybody from mining companies and their employees to traders to, I mean, you just go on and on about all the people that have conceivably lost money due to this manipulation that's just been egregious for the last 15 years, but it started much before that. I mean, the potential losses and liability is so great that you're going to see these banks just say, "Oh, screw it. It's just not worth it. We're out of this." And once we get the banks out of the futures and the commodities business, especially as it pertains to metals, as we spoke earlier about how the banks make the markets and they issue the contracts, when we get them out of there, we get the futures exchanges either collapse or at least be run on a more fair, less leveraged basis, then we'll see the prices doing a little better than they are today.
Did you see that Sprott Incorporated and the guys from the ICE exchange in the book Flash Boys that Michael Lewis wrote about, that they're working on a joint venture to create a new physically gold-backed gold futures exchange where the settlement is only in physical gold, and they're using a blockchain for settlement to keep track of it to prevent hacking?
I did.
So that's interesting. Hopefully that will also help with the Shanghai Gold Exchange in the future. It's not going to be, an immediate cure-all, but I'm optimistic maybe that in a couple years that that market will gain traction as well.
Well, I'm not trying to say that there's no use for a futures market in its traditional sense, right? I mean, it was originally set up when the idea of futures contracts over, more than a century ago, is that it allowed the producer of the commodity to sell forward their future production and lock in a price, so they could manage their business, and allow the speculators to take the other side of that trade, and you make a market. But that's a total bastardization today of what we have versus that. Now it's just all speculators, and the banks win because they control the market by issuing the contracts and just taking the other side of these speculators, knowing that they've got deeper pockets and can simply outlast them.
Or change the rules on the margin requirements, what happened, during the during 2011 when gold and silver were really taking off. How they changed the margin requirements rules to slow it down and knock it back down.
Or go back to 1980, where they just changed the rules of the exchange.
Yeah, they shut it down, right? There were no long positions allowed, right?
Right, just liquidation only. So again, this is a criminal, corrupt enterprise. And a little bit of history that I'd point out to everybody. FDR made it illegal for U.S. citizens to own gold back in the 1930s. That was finally made legal again for U.S. citizens to own physical gold on January 1, 1975. Okay. Do you know what date the COMEX began trading gold futures, Jason?
1974, a year before. So they knew it was coming, right?
December 31st, 1974. You think that's a coincidence, my friend?
Definitely not.
Yeah. So there you go.
Definitely not. The bankers think ahead like this. This is, just normal how Wall Street makes money, man. They don't leave things to chance like this. They like to rig markets. This is, with the high frequency, I've heard you talk about this. I've talked about this too. These high frequency trading computers, they talk their bullshit thing that they tell the public is, oh, we provide liquidity. They don't provide any liquidity. They create extra volatility in these markets. They move markets extra up or extra down a lot more, and they screw the little guy. So if you're a little day trader and you don't have a high-frequency trading computer, the odds of you being able to scalp a profit are very low. Now, if you're more of a swing trader and you have longer positions, longer than a day or so, or you're a longer-term investor and you wait and you buy on dips or things when they're smashes, okay, maybe you'll do all right. But you can't day trade with these guys when they have, so much money invested in these programs.
No doubt about it. I've described high-frequency trading like a river. In fact, there's a river where I grew up called the Platte River in Nebraska. And basically, that's an Indian word for flat water. I think is what that means. Or that might even be what Nebraska means as an Indian word. I can't remember. But either way, the Platte River is about a mile wide and in some spots no more than 6 inches deep. That's kind of what high frequency trading liquidity is. I mean, it appears to be there, but man, they pull it in a second. That's why, if you remember the Blue Monday early morning crash back on August 24th of 2015, when we'd have crashed 3,000, 4,000 Dow points if it weren't for the 5% trading collars. That was because all of that high frequency trading liquidity got pulled and there wasn't any. And now let me tie all this back together. That crash was the culmination of a dollar shortage, if you will, where the Chinese yuan had been devalued by more than 3% in the previous couple of weeks because the dollar had been rallying due to a dollar shortage. And then we got this market crash in the middle of August of 2015. The same thing repeated in late December and early January of this year, where after the Fed hiked rates, the dollar spiked, put great pressure on the Chinese to devalue the yuan. They did. And you had the exact same thing play out, and the S&P crashed 10% again. Well, ever since the election, we've had this huge move in the dollar. Chinese have been working the devaluation again of the yuan. It's down now about 3.5% over the last month. We haven't seen the S&P correct 10% yet, but I suspect if you just give it a little time, it's probably coming.
Yeah, and if Donald Trump's already in office in January, they could say, oh, it's Trump's fault. And then the Federal Reserve can come in after that and say, look, Trump tried to do this, and we have to save the economy again. The people in power are interventionists, though, man. I don't know if they're going to let the asset prices fall 10% or more without, doing more and more intervention. I think the people in power just don't like free markets and just don't really like capitalism in general. They want to do what they want to do. They want to push levers. Even Trump wants to spend more money. I mean, it looks like Trump wants to do supply side economics with the tax cuts. I guess he's trying to improve the real economy in theory. But if we don't get improvement in the real economy, this could, rapidly accelerate the debt and lead to much worse stagflation in the near term.
And one last point I'd make on that. You mentioned Druckenmiller earlier, and I saw something earlier today that said Stanley Druckenmiller now thinks that the 10-year Treasury note's going to 6% over the next, whatever he said, year or two. Again, now we're trading, about 2.5% right now. Okay. All right, Stan, fair enough. But I would suggest that is almost an economic impossibility. The line item on the U.S. Federal budget, even though we don't have a budget, the line item is still there, of interest on the national debt, interest payments on the national debt. It's about $350 billion. In fact, it's been $350 billion for the last couple of years, even though the debt's been rising. And why is that? Because the Treasury Department has moved the vast majority of our outstanding bonds and that debt into the shortest maturity possible to get the lowest possible interest rate on all of it and keep that line item down to $350 billion. But if rates normalize, whatever that means, if rates go to 6%, as the aforementioned brilliant salesman Mr. Druckenmiller says, then that line item on the national debt is going to balloon from $350 billion to $700 billion or $800 billion, $900, $1 trillion. Then you got Trump talking about all this infrastructure spending and tax cuts. What's the annual deficit going to be by 2018? $2 trillion a year? And if the Chinese and the Saudis, as we see from the actual data, are no longer active buyers of our debt, well, who the hell's going to fund it then?
How about that $19 trillion, Craig, that's sitting in 401ks and IRAs of U.S. citizens? They'll force you to buy it then for national security purposes. Everyone has to buy 1 or 2% of all their assets have to be in treasuries then. So
wrapping it all back together, Jason, and to where we started with the election, there's this narrative now. And again, I termed it an effect looking for a cause, and you talked about Taleb, how people try to, I don't want to call them random events, but these events have happened and now people are grasping at straws trying to come up with what they think is a rational explanation as to why it's happened. What I would suggest is now that narrative of, well, this is easy. It's a Trumpflation and there's going to be inflation and higher interest rates and growth and all this stuff. It's probably not going to work out in some easy, simple, linear fashion as we turn the corner into 2017. I would advise everyone to be extra cautious here with your 401k, all that kind of stuff. Problems are not fixed. The problems are not solved. The debt isn't going away, all of that stuff, just because Donald Trump won the election. Now is a time to be cautious, to be prepared, to be alert. That's what we do at TF Metals Report, but you don't have to do it on our side. You just do that in your own personal life. Don't take what the media is shoveling toward you, at face value. Do your own research, listen to your gut and your instincts, and prepare for what will be a very volatile and hard to predict 2017.
The funny thing, Craig, about Stanley Druckenmiller is he was talking about how he sees inflation picking up, and yet, he said that's bad for gold. But, when you go back and look how gold has performed historically, gold normally does well during times of a lot of inflation. So it was just kind of head-scratching when he said that, as that was his reason for why he sold his gold position as well.
Again, an effect looking for a cause. We'll see. We'll see.
Well, I have one more question before I let you go, and it's about the dollar liquidity problems now. It's being talked about on Zero Hedge and by hedge fund managers, by Raoul Pal of Real Vision TV. He was a former top hedge fund manager as well. We have $9 trillion outstanding in foreign dollar denominated debt. So if the dollar does get stronger like you're expecting in the near term for whatever different reason, do you think then that this could potentially accelerate the collapse in the global economy?
Oh, absolutely. No question about it. And that's putting a tremendous stress on all these emerging markets. It gets back, the biggest emerging market is the Chinese, and they have this demand for dollars. That's why, I speculated when we saw the largest percentage one-day move in the U.S. bond market ever take place the day after the election. I speculated at the time that almost had to be the Chinese, maybe the Saudis as well, anticipating a Trump presidency and accelerating their liquidation of treasuries. You liquidate treasuries, prices go down, yields go up, and on that day they went up by a historic change, biggest one-day change ever. Well, the Chinese are trying to raise dollars because they need them to service their debt, and they need them to be able to sell them to help tamp down this dollar rise, which, because their currency is pegged to the dollar still, is increasing the yuan as well. And in an export-driven economy, they don't want a stronger currency. They want a weaker currency. So all these things combine. And again, you're being fed this, not you, but everybody listening to us is being fed this story by CNBC and Bloomberg and Market Watch and everything else that somehow all these dots connect into this magical wonderland of unicorns and rainbows and lollipops. And I just don't think it's that simple. And 2017 is going to be a wild ride. Maybe not the end of this year so much. The next couple of weeks will probably not going to be a lot of people willing to make bets ahead of the FOMC. But once we get that behind us and we turn the corner into 2017, all bets are off. And I would just suggest that it's not going to turn out as glorious as some would lead you to believe.
We had record money from retail U.S. investors go into stock mutual funds, around $27 billion in the last couple of weeks. That seems to me like the herd, the dumb money, the trend following people, trying to buy high and sell higher. It seems like the same people who bought technology stocks in 1999 and 2000, who bought real estate in 2006, 2007, hoping to make a quick buck and then sell it at a higher price to another, greater fool theory type of thing.
I remember in my former life, I once saw a report from the mutual fund, I guess we call it a review firm, Morningstar. And this was put out in the year 2000 or 2001. And they looked at all mutual fund performance through that roaring decade of the 90s and how great it was and how the average fund was up 15% or 18% a year, something like that. And they concluded, though, that the average retail investor only made 2% annually through the 90s. And why is that? Because the average retail investor always does the wrong thing. They sell at the lows and they buy at the highs. And so to your point, I would suggest that's happening again now.
Yeah, I agree. So people should be wary. I think, gold and silver on weakness, I think they're good accumulations. The right mining companies that on weakness are good accumulations. Just make sure you don't put too much of your money in the junior miners because, if the correction lasts longer than we think, some of these miners will either get bought for pennies or they'll go, junior miners will either get bought for pennies or go bankrupt.
Yeah, diversification is always pretty important, especially when we're talking about the mining shares. No doubt about that.
My last question for you is about this fake news narrative that's going around from the mainstream media, the Washington Post article. Are you upset that you didn't make the fake news since so many of our friends did, like Dave Kranzler and Eric Dubin of the News Doctors and Paul Craig Roberts and other people?
I know, and I was bummed. Well, let me say, I was kind of bummed. I know why I didn't. If it was a couple of years ago, I would have. But I think ever since we put up that $10 subscription, our traffic is down enough that we're not recognized like we used to be, as this big, heavy traffic site. And so that's why, some of my friends got hit on that list and I didn't. I would have been otherwise, I'm sure, from the content that we have. On the other side, though, on the, I guess we'll call it the realistic side, I'm damn glad I didn't make it, because if history is any guide, if the IRS can go out and investigate any not 401c3 that applies for a non-tax, that has the word Tea Party in it,
Yep.
who's to say that somebody in the government is going to sick the IRS on every single website that's on that list,
Yeah,
and not that I'm saying I got anything to hide. It's just that's a hassle I don't need. That's a hassle nobody needs or wants. So I'm glad to toil in relative anonymity and obscurity, Jason. I can tell you that.
Our society is just becoming so dystopian now. They pretend like the mainstream media is objective. They pretend these government agencies are corrupt. And here they are, going after targeting Tea Party groups, targeting libertarian groups. Ron Paul's being sued, his Campaign for Liberty. They're trying to get the names and lists of every single one of his donors, which is ridiculous. They don't ask that of other groups.
No.
And, you add that to what these other governments are doing, whether it's India talking about banning gold imports, what they did and how they killed thousands of poor people, banning their small denomination cash bills, and then and then printing new bills that don't even fit in the ATM machines. These politicians and academics, man, it's really unbelievable. And then they blame capitalism and free markets for things that they screw up, and then they always say that, we have to double down, that'll fix it. Yeah, sure.
And it's all about the information flow and controlling the narrative and the message, and that's what this fake news thing is about. And if anything should prove to the average listener, like on my site, we talk all about the government data, and what a scam the employment report is, and how they never report how it's all part-time jobs or the participation rate. You got Stanley Fischer out there talking about full employment when we got 95 million people not even in the labor force, that kind of stuff. And we call attention to that and say, this is all just a lie. See how you're getting manipulated?
Let them eat cake.
Well, there's probably people out there that think, that guy's crazy. Come on, that can't be right. Well, then when you see a story like this fake news thing and how they're trying now overtly to paint with a broad brush and cast as treasonous, really, anybody that disagrees with that narrative really should be an eye-opener for everybody about all of the other stuff that we've talked about the fake government statistics and the lies and everything that's perpetuated by the media to try to create this myth that everything's okay, and to promote their agenda. Yeah, no, the fake news thing is really something, between Dave Kranzler or the Silver Doctors or Eric Dubin or Mike Krieger. I mean, these are all people I know. I mean, they're not, I can assure you, Mike Krieger at Liberty Blitzkrieg is not some kind of Russian operative.
He worked on Wall Street, and for writing articles about gold and silver, they actually basically fired him. I mean, I've known Mike for years. I've spoken with him in emails for years. He had a good, commodity analyst job there, and for even talking positively about gold and silver at all, he was basically fired.
And if the Washington Post was seeking to write a fair story, they would contact people on that list first. They'd say, what can you tell us about this? No, but that's not what they did. They just simply ran with the story and printed the whole list. And that tells you what their Washington Post agenda really is. And this is extraordinarily dangerous stuff. And man, if people are hearing this for the first time, just Google fake news in Washington Post and you'll see what's going on. And it's a really bad sign for the future of this country.
Yeah, I agree. This is a McCarthyism style witch hunt. I'm really glad Hillary Clinton didn't win the election, because she was talking about, using the Department of Justice to go after people like us, either shutting down our websites or, issuing us large fines or prison time. She was going to go after, Breitbart and Matt Drudge and Alex Jones and everyone else underneath as well. So hopefully, Trump, I didn't vote for Trump, but I don't think he'll be nearly as bad as Hillary Clinton for, going after freedom of speech quite that way. But I am worried about people who like freedom and libertarian, because the government is still going after us, unfortunately, and the rules are changing. It's not even safe anymore, Craig, to keep a lot of cash in a bank account anymore. So the world is just becoming very, very scary.
Exactly. And anybody that senses all of this, senses in their stomach that something's not right, you got a fiduciary responsibility to prepare for that worst case. Hope for the best, plan for the worst. And if you don't, you don't want to end up, the proverbial guy on the roof, with the flood all around you with the sign saying, rescue me. You got to take all that stuff onto yourself in the days ahead. You're being allowed this time to wisen up and prepare. And again, we just suggest to everybody that they use it wisely.
Okay, great. Well, I want to thank you for your time today, Craig. Hopefully you'll come back on soon. And for our listeners who are interested in what TF Metals Report has to offer, what do you have? You have a subscription for your podcast, and do you have a paid newsletter?
Yeah, if this kind of echoes and sound in your head, anybody listening, and you sound, oh, that sounds like a place that these guys are making some sense. That's what TF Metals Report is all about. The tagline to the site has always been, the end of the great Keynesian experiment is upon us, prepare accordingly. The site is populated with people far smarter than I am that provide all sorts of information. I mean, I'm just one guy, who works this 16 hours a day, 5 days a week. It's the people on the site that make it what it is. They provide the links. They provide the information. They provide stuff from all over the world I just don't think you can find anything else. A lot of the site is free. But if you want daily analysis of the metals and the economy and everything else, I do a podcast every day. I write subscription content every day, and it all works out to be about 40 cents a day. So it's not like a backbreaker. Again, it's all at tfmetalsreport.com.
Great. Well, you've been one of the main people in the gold and silver movement for a while now. And, it's been fun listening to your podcast for a long time. I enjoy them. You inject really good humor into them.
Thank you, Jason. Yeah, I feel like a grizzled veteran. I feel like, how even Obama, the 8 years he was president, he went from this kind of youthful looking guy to now he looks like, Fred Sanford, he's all strung out. Look what happened to George Bush over 8 years. I kind of feel like the same thing's happened to me over the last 8 years. Well, we're gonna see our way through it. The cause is just, and we're gonna keep fighting.
Yeah, I agree. I'm going to keep fighting too. And it's better to laugh than to cry about, all the stuff going on around, because the stuff is quite scary, all the news stories and stuff. And how with the propaganda now, it's just unbelievable, the amount of propaganda that's really going on from the mainstream media. I mean, after the 2008 financial crisis, Craig, you were in the financial industry too, like me. And the story we were told about the 2008 financial crisis was ridiculous. The mainstream media knew the crisis was basically coming. They, fired a lot of the analysts that were talking about it, they wouldn't let them on TV. And, after all these other things with the Iraq war, and now with how they've given one-sided coverage to Hillary Clinton, I don't think they should have any credibility at all. And it's people like you, me, and basically the other people on the fake news list who are interviewing people with alternative viewpoints who should have credibility in this environment.
You got that right, my friend. Keep fighting the fight. We need you out there.